Now let's go over the pros of each of these organizations because this may make or break your decision and whether or not you go with them, right? So when it comes to Schwab, they do have the 0%, their $0 commission plus no robo advisor fee. They also give you fractional shares with $1 minimum. I actually do buy the S&P 500, like I buy $100 from a Roth IRA every single month. And also, they do have a strong reputation and in person branches. I believe they got about 300 branches all over the United States. Fidelity also has some branches, but it's not as vast as Schwab. They call them investor centers. It's not like Bank of America, right? They have branches like everywhere to manage expectations there. Now, Fidelity, the pros of Fidelity, of course, it is a very comprehensive platform. In fact, as I was doing research for this, I noticed that Fidelity has in-depth research and analytical tools. And I want to say that this is more for advanced investors that really want to get into the weeds and ratios and profits and losses for each company and each stock. So if you're just getting started, then it's something that it may not be quite relevant yet, you know? So personally, as a beginner, I remember that it was just all about, hey, let me just buy ETFs, S&P 500, and that's it, right? Like just let me just get started and getting to know all these terms. Now, Fidelity also has strong retirement options, just like Schwab, by the way. These two are very, very similar. And Fidelity is also excellent for traditional Roth IRAs and robust retirement planning tools. And they also provide you, of course, with fractional shares with $1 minimum. So as you can see here, Fidelity and Schwab are actually two very strong, reputable, with a lot of pros and advantages. Now, SoFi Invest is a little bit different. They do have a lot of powerful features, but they cater more so towards somebody that is more modern, in my personal opinion, and somebody that is also a little bit more of a beginner. So SoFi Invest, the pros is like beginner friendly. It's got a simple interface. They do give you cash bonuses to sign up. They give you an all-in-one hub if you want to have your checking, your savings. They give you right now a $300 bonus to sign up with them, and that's pretty good, right? And also, there's got a low barrier to entry with a $5 minimum for fractional shares, $0 trading, and 50%, excuse me, $50 for the robo advisor. So it's safe to say that, as I mentioned, if you got $10, you can start with any of them. It's just really going to depend on, okay, who do you like? All right. So now, with that being said, let's go into the cons of each organization. So Schwab, on one hand, one of the cons is the $5,000 minimum that the robo advisor requires, and that's pretty high, right? So again, this is really going to depend on whether or not you end up using the robo advisor. It may not be for you. If you can just do it on your own, then you can still literally just get started with $1, $10, and you're good to go. Also, Schwab, I must say, I've been using this Schwab for the last couple of years, and it does have kind of an old school interface. But I mean, honestly, it doesn't bother me, but I can see how some people may be like, oh, I want more modern features. But so this is really going to depend on your perspective and the way you look at things. Now, Fidelity, on the other hand, they do have a 0.35% robo advisor fee for balances $25,000 plus, and it's a little bit higher than the fee-free robo advisor, right? And also the interface can feel complex for Fidelity. As I mentioned previously, Fidelity's got a great reputation for having in-depth analytical tools, which for a beginner, as I mentioned previously, it may be a little bit overwhelming. Now, it's also got slower transfers. Now, this actually comes as part of a comment or a couple of comments that I received from users from Fidelity who use their cash management account, who mentioned that transfers to their bank can take anywhere between a week to even 20 days. So it's a little too long, in my personal opinion. But again, if you're somebody that is a planner and you are okay with those transfers, I'm not saying it's always going to take that long, but I just want to give you here some caution so that way you know what you're signing up for. Now, SoFi, of course, also has a couple of other cons. They do have a fractional share higher minimum. So you don't start with $1. With SoFi, you start with $5. It is a $4 difference, but hey, it is what it is. It is a con in that way. Again, it just depends. A lot of people watching this video may be like, dude, it's $4. I get it. I just wanted to mention it here. Now, also, they do have lower APY on their cash management feature, which, as I mentioned, they don't really thrive on cash management. They thrive more so on the high yield savings account portion right nowadays. SoFi is offering up to 4.5% with the high yield savings. So, in a way, the high yield savings account from SoFi does compete interest wise with cash management interest rate that Fidelity and Schwab offer. So, my friend, which one is for you? At the end of the day, the way I see this, Fidelity is ideal for building a retirement focused investment hub, whether it's a 401k, traditional, or Roth IRA, and it's built for long term growth, right? So it's also cost conscious investing, access, zero cost index funds, commission free trades, and a seamless cash management account. And of course, it's got robust analytical tools. So if that's you, then Fidelity could be a good option for you. But Schwab is not too far behind, right? Because Schwab is also a giant in the financial space. Or if you want a well rounded, beginner friendly experience, Schwab does offer a strong support, robust research tools like Fidelity, and intuitive navigation, of course. They also have the ATM fee rebates, like Fidelity also offers that. And they also are a dependable all around broker with cash management features. Now, SoFi, on the other hand, a little bit different, adding a little bit of different flavor here to the mix. It's perfect for new investors. If you are somebody that want to start with $5, maybe you want to take advantage of the sign up bonuses, the automated features, and a streamlined experience where you want to have all your banking in one place, maybe student loans, maybe you want to have also like mortgage and like a bunch of things, right? So I think at this point, you already kind of have an idea of which one is for you. And so here's my overall takeaway. As a beginner, honestly, I don't think you can go wrong with either of these options. Fidelity and Schwab are great, reputable brokers, and it really will come down to who you like best and whose ecosystem you want to or you are already part of. So, for example, if you already have all the stuff with Fidelity, your retirement accounts, then it's just, to me, it's just like, well, might as well just open quickly. Your information was already there. Just open a Roth IRA or start your brokerage account. If the same thing with Schwab, that's how I ended up opening my Roth IRA with Schwab. It's like, hey, like I already have my brokerage account here. Let me just open a Roth IRA. But I do understand how SoFi could be also great for beginners and for those especially who already have SoFi features or SoFi accounts in their money ecosystem. So if you're somebody that is already part of the SoFi ecosystem, or you want to start as a beginner with SoFi just because you like it, you can also take advantage of sign up bonuses with SoFi. Then if this is for you, then sign up through the link in the description of this video. And that's going to help you get started with the bonus. And you can get started with a high yield savings account or a checking account, or even getting started with investing. So remember that the best time to plant the tree was 20 years ago, and the second best time is now. So which one is for you? I would love to know. Thank you guys for being here. Make sure to like, comment, subscribe, and most importantly, share. I'll see you guys on the next one.